All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. If you're looking for more evidence to the theory that every time the Fed speaks or makes a comment nowadays, the market goes up, today's another day where you can put that into the evidence. As we saw the market kind of open fairly flat, not really going anywhere, and then it got about a 10-point bump up when we saw some Chairman Powell comments come out, and I posted some of that into the feed, but gave this 10-point bump higher. And we continue to see this. We continue to see the market's reaction to anything the Fed says be very, very positive. And is it really as positive as what they're talking about? Well, J.P. Morgan, their chief financial officer this morning, came out with some pretty interesting comments that kind of fly in the face of what the Fed is saying. And they talked about. They also talked about their big kind of $50 billion fund and how they've been selling in that fund based on what's going on with the Fed getting more dovish, but a lot of information about J.P. Morgan out this morning. As they've talked about trading revenues, they've talked about trading weakness within J.P. Morgan right now, deposit growth, and all those types of things. So they've had they're having their investor day, and that's where a lot of that information is coming from. But overall, small gap down in the market, but no real urgency to sell out there. No real signs of selling coming into the markets. We don't have a huge buy here either, but kind of same old what the market has been. It's doing here today, and some of yesterday's laggards are leading today, and some of yesterday's leaders are lagging here today. We did see pre-market small caps were pretty they weren't down all that much. They were pretty flat. The S&P has rallied here since the open to basically erase its loss, but small caps really haven't done anything. They have just sat here in the exact same spot, pretty much doing nothing here on the day. Transports as well, and so really kind of a wash out there right now with how things sit. Now, could things change? Yeah, absolutely, they could change, but no real great advantage for either bull or bear. In the kind of day trade type sense right here this morning. When you look at some of the gap downs this morning, and let me just pull up a little scan here and show it to you. And this is one that I pulled early here this morning. Just curious of where some things were. Let's see, where is it? This one's going to look for bullish gaps. I'm going to look for bearish gaps here, gaps below the 7-day moving average, since almost every stock out there is above its 7-day moving average right now. But let's run this scan. And you can see 318 stocks, and let me actually go back and turn this to S&P so we get a little bit more of a consistent measure here. S&P 500, run that. All right, so 68 stocks in the S&P 500, gap below their 7-day moving average. That's what, 13.5%, almost 14%, of the stocks in the S&P. That's a pretty big number for a market that opened pretty flat. Right, this is a big number for a market that opened flat. But look at the names on here: Bank of America, J.P. Morgan, Wells Fargo, Citigroup, Morgan Stanley, Key. You notice a theme here, right? BBT, MetLife. I mean, there's a big financial component here to this. You start getting down here to Bank of New York Mellon, FITB, IVZ, USB. I mean, it's very financial driven. American Express, Zions Bank, Sun SunTrust. In fact, let's see. Curiosity. Let's see how many of these are financial. Here we go. So you can see how many of the financials gap below the 7-day moving average, right? That was a big driver and really off of the JP Morgan comments here this morning. Other sectors like energy, not all that much. Consumer names, not too much. Industrials, a little bit more. There's a catalyst there. Materials, only one stock. And tech, very few. I guess they're counting Visa as a tech stock, a software stock. Probably correct there, more than a financial. But anyway, that's that's kind of what we see going on. It's not something where a lot of these gaps have held, right? Where you can look and say, well, Bank of America, it got below at 7, and it's selling. No, it's actually getting bought up, right? And in this financial area, you can see the XLF gap below the 7, and it's now trading above the 7. So a lot of that type of action out there in the market today. The volumes have been really low, so it's not it's not the type of action that I would bet money that it would hold or anything like that. But it's the kind of prevailing action out there with some of the stuff that was weak early on here this morning. Now, we also saw a big industrial component there. Caterpillar this morning downgraded in a very interesting downgrade. And you can see the stock gap down pretty big. And, it's been rallying here since. But UBS came out and they downgraded Caterpillar here to sell from buy. So that's kind of a double downgrade and went from buy, neutral, to sell in the way they kind of look at things. But they lowered their price target to 125. All right, to 125. So right down here. And, basically said that 55% of Caterpillar's end markets will peak in 2019. This will pressure revenue and margins in 2020 as demand declines. Continued growth in mining and share buybacks will not be enough to offset headwinds in construction and oil and gas. Basically says that this story is not priced into the shares, and that the earnings growth estimates are way too high. And so pretty bold statement, especially when it comes to a major Dow component to throw a sell rating like this out there on them. Is it justifiable? Fundamentally speaking, well. But we've talked about CAT a little bit, here over time, and let's just go take a look. I'm just coming into Y charts and, just going to bring up some of the normal metrics here. But revenue, right, over the last 10 years, right, you can see revenue's kind of been growing, but it's nowhere near where it was back here in 2012, 2013. Okay, it's still pretty shy of those levels, but the stock price is significantly greater than it was at those levels. One of the things that UBS talked about were margins, and basically said they expect margins to peak out or to top out. Do they have a decent argument for that? Well, margins have been one of the reasons why CAT is up here. But, margins peaking out, they're not used to margins, or we're not, used to seeing Caterpillar with margins much higher than this. Even if we go back to Max, right, you look at where margins have kind of peaked out, 2011, you can see back here in 2007 where margins peaked out. And, as these margins peaked out, that's kind of where we've seen the stock really fall off 3 to 6 months later. This isn't an instant, hey, boom, margins peak, boom, stock's going to drop. But it's been about a 3 to 6 month kind of delay. And so that's really the crux of the argument here for UBS, is saying, look, margins, revenues, they're going to start to decline. That's going to eat into earnings in a big way. So if you have a stock like that, it needs to have some really good valuation metrics to hold up in that environment. If we look at Caterpillar, let me go 10 years so this makes a little more sense. Their price to book value, it's not historically low. It's double what it was back here in 2016. It's not exactly cheap. Let's go to price to sales here. And you can see the price to sales on Caterpillar is 1.5, so not exactly cheap on a historical basis. And then price to earnings, which is another valuation metric, PE here, price to earnings. You can see it's at about 13, right? That is pretty darn cheap for Caterpillar. Right? That's not an expensive number for Caterpillar, and so yep, you can make an argument it's cheap on that basis. On the other basis, it's not exactly super cheap. But we're not talking about a very expensive stock either, right? But definitely would not be able to hold up if margins and revenues started to decline. So I think it's one of those stories that it's going to create some waves here today. But one of those stories that is worth watching is perhaps the canary in the coal mine for recession watchers. Is perhaps this, the company where, we're going to hear from Tesla and all the hubbub there, but that's not going to say anything about global economy. We're going to hear from Apple and iPhones, but that's not going to say too much about global economy. Caterpillar, it's going to say a heck of a lot. And so, this is one bearish thesis, here with it. There are plenty of bullish theses here, or theses for Caterpillar, but this is why a lot of the industrials have gapped below their 7s here today, is with this Caterpillar downgrade. I've been watching it, here since the open. I haven't found something where I go, I want to trade, here for it. But, it's more common than not for this type of gap to see further selling, come into play here on it. Now, another group that, sold off into the close yesterday and then was indicated lower here this morning is the tech area, the tech group. And it looks like market's selling off a little bit here while I'm yapping. It's kind of erasing that Fed bump, right? This little Fed bump here. Market's erasing that. It erased the Trump bump yesterday. Now erasing the Fed bump. Okay. But tech, right? Things like Micron. We're set to gap lower this morning. And, but boom, immediately out of the gate, green. We saw a lot of this in tech. Apple was indicated lower, and boom, immediately out of the gate, we saw this kind of buy come into tech and push them higher. Now, they're giving this up, and I do believe that if tech is not able to hold gains here today, that's a very slippery slope for the markets, because when you think of where hedge funds have been really involved in this market outside of healthcare, right? You look at, they've been involved in industrials and they've been involved in tech. Well, the industrials and hedge funds, much more momentum type traders. Industrials have taken a knock here today with Caterpillar, and if tech's not able to hold up, do we start to see some of that momentum really start to, go outward, fairly quickly? I think the answer is yes. I think we can make a very good argument that we will see that if tech is not able to hold up today. So we'll be interesting. I mean, I don't think right now we can look at tech and go, wow, this is a major knock. But you look at small caps, they're pushing into new lows here on the day. This is definitely switching a little bit in terms of bearish advantages here as I'm speaking right here on video. But you can still see on the board a lot of mix of red and green. This isn't a hey, wash out, sell everything. Something terrible is out there, type of sell off. But there are those couple real kind of key drivers that are out there this morning. Now, I was asked about Tesla earlier, and you know what? With Tesla, I'm not gonna. I don't know. Anything below 300, I'm not willing to be a seller. Above 300, yeah, I'm willing to be a little bit of a seller. But, Tesla is one of those that everybody has a comment on, everybody has an opinion on. My long-term opinion is that the company is game-changing, the company is revolutionary, and the company is run by one of the most intelligent people on the planet. Now, intelligent people are often eccentric in many different ways, and Elon Musk definitely has some of that to him, right? And when he calls out and does certain things that aren't typical of a CEO, the market struggles to adjust, right? We've seen that with U.S. President Trump. He's not your typical U.S. president, right? And so the market sometimes, kind of struggles to adjust, but it's more of a perception thing than an action thing. I think, what was it? Was Jim Cramer on this morning calling for Elon Musk to step down or something like that? It's Cramer Musk should be removed as Tesla's CEO for attack on SEC. But I think it's really interesting him going after the SEC. We have not seen anybody really stand up to the SEC historically. And there are some serious issues there that have been brought up over time, but nobody's had the courage to really, or the maybe not the courage, but the financial backing and moxie to really kind of stand up. So it's going to be an interesting story. It's going to keep going on, and we're going to have people calling for this, that, and the other. But I think that detracts away from what's really going on with the company, and what's really going on with the company continues to be very positive overall longer term. And yes, with any growing company, there are always holes and issues and different things here and there, but. It's not one that I look at right here and go, wow, there's a great trade. I know I mentioned it last week when it broke below the 7 here. It could be played down below 300 or to the lower band. But, you can almost make an argument it should be bought up off this lower band right here. But you do have to be wary of the lower highs that, continue to come into the stock here in the short run overall. Now, I've been looking for some entries on a few names. I looked at some of the financials this morning with the gaps they had. They weren't gaps to kind of sell. They just were gaps to kind of move on from. So I did. Halliburton here is one that I am looking at for that kind of move back here to 29.28. And today it went bumped up against 32 again, just like yesterday. And so there's a good risk reward setup forming here with Halliburton. So definitely on my radar. I've not jumped in here just yet, but you can see 32 is that upper band here as well. Definitely interested there. Also been watching Micron. We saw it. We saw kind of this reversal on it yesterday. Gap down this morning, but not really given much of a sell here. And then I would like back into FedEx, and been watching this all morning. Is it ready to really move? And I don't think I can make a good argument that it's ready to really move. Right here. Now, one of the things with FedEx is when it is ready to move, sometimes it moves very, very quickly. And, if you're not in ahead of that move, you're not going to catch any of the move. And that's always the risk. But you can see the little, kind of once again, FedEx struggling in this 182, 183 area, and so definitely on my radar there, to be a buyer. I'm also very curious to how Deere holds up off the cat news yesterday or this morning. The downgrade here, you could make a decent argument that the Deere won't be affected by it in terms of those end market products. Their end market products there's quite a bit of differentiation between the two, but they tend to trade together over time. But overall, when I go and I look at just some of the signals coming in this morning, some of the setups coming in this morning, they're kind of like what some of the downside setups have been, just kind of really lukewarm, if that. To just, all right, can't really make a good technical argument that they're going down and going down fast. There's going to be a big steep drop here, right away. We did see the XLY reverse yesterday. We saw Amazon reverse yesterday, open lower here this morning. And these are two areas that I think have some significant room to the downside. But nothing where I go, man, if I don't enter right here, right now, man, I'm going to miss out in a big way. I think, there's still just that, sideways compression, type of action that exists, out there. And, if that changes, it could change very quickly. And if that changes, we'll have to react, fairly abruptly, and we'll look to do so. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.